Hi guys, Lynette Zang, Chief Market Analyst here at ITM Trading, a full service buy, sell physical precious metals brokerage house. Today we're going to call this new name Just a Little Peek, and we're going to talk about the gold market, the supply and demand, the demand, the supply, and the manipulation, and then the relative performance. So you saw this graph the other day, but I just want to remind you of all of the different uses of gold. Okay. And we know that central banks, now these are part of the BRICS, right? Central banks are buying gold like crazy because they're well aware of what they're doing to their currencies. And in addition, we even have more buyers of the physical since Sharia law was recently passed, and you have to be able to make delivery immediately, basically. So we've got growing demand. We know the coin, the mint sales are up, etc. Big demand. So how come, what's happening with the price of gold? I'll get to that in a second. But here's supply. With physical gold, there is a limited amount. Gold is indestructible, so we can account for pretty much all of the gold that has ever been mined, and it fits into 2 Olympic-sized swimming pools. Plus, this is what they've determined is yet in the ground. So it works out to roughly maybe about 1 billion ounces. There is a finite amount, whether it's above ground or in the ground, and it doesn't matter what the form is. But this is showing you production. And what you're looking at here is we've already hit peak gold. So this is the discovery. Let's see. Okay. So this is the discovery and this is the production. And you can see that it takes 20 years or more from discovery to bring a mine to production. And look at the discovery. And we know there's just a small amount of gold left. So I hope that makes sense to you. In addition, as you are mining, the further down you go, the easy gold is gone. So it takes more and more ore to pull less and less gold out of the ground. That gets expensive. So the further down you have to go, the more expensive it is to pull the gold out of the ground. Now, they've done a great job as these markets have been manipulated in reducing the cost, but you still have an average cost to mine of 936. Is that what it is? Yeah. Not the average, $936 to mine an ounce of gold. Now, we're not talking about refining it or any of those other additional costs. This is just the cost to pull it out of the ground. So with spot, when I pulled the number earlier at 1195.60, can you see that there's really not a whole lot of margin or a whole lot of fudge room in there? This does not account for any taxes or any other costs, just the cost to mine. And they've worked really, really hard to get those costs down in this manipulated environment. Speaking of that, let's look at the different ways that they manipulate these markets. A real big one and a real popular one and definitely one of influence is the ETF and ETP markets, which is paper gold. Those are the trusts. And it's really interesting to see. This is spot gold here, so follow this line. Isn't it interesting that spot gold follows the rise and decline of gold held inside of those paper products? But what people think they own and what they actually own are 2 different things. This comes from the Spider Gold Trust, and it's pretty typical of what you see if you look at the prospectus. You don't own gold. You own shares in a trust, and they sell off part of their holdings to pay their fees. And they do this actually monthly, which is why you see that discrepancy between the blue line and the red line. That's the blue line is the net asset value of the shares. So what you also need to understand is that while you as an individual do not have the right to convert it into the physical market, the banks do. The big players do. So it's an easy thing to manipulate. And as you've seen before, but I'm going to reiterate it so we have everything in one neat place, it's also super cheap to do it. Okay, down on the bottom, Bill. So you can see it costs the banks like, let's say Deutsche Bank or Wells Fargo, $1.45 to control 1,000 barrels of oil, 5,000 ounces of silver, or 100 ounces of physical gold. Those are the physical markets. It costs the central banks and their minion $1.10. Now, this is the front of a lawsuit on gold manipulation. So let me just read those that are named in this lawsuit. The Bank of Nova Scotia, Scotia Mata, Scotia Capital USA Inc., Barclays PLC, Barclays Bank PLC, Barclays Capital Canada Inc., Barclays Capital Inc., Barclays Capital PLC, Deutsche Bank AG, love them, Deutsche Bank Securities Limited, Deutsche Bank Securities Inc., HSBC Bank, HSBC Holdings PLC, HSBC Bank Canada, HSBC Securities Canada Inc., HSBC USA Inc., HSBC Securities USA Inc., London Gold Market Fixing Ltd., Society General Canada, Society General SA, SG Americas Securities LLC, UBS AG, UBS Bank Canada, and UBS Securities LLC. They are all named in this lawsuit for gold manipulation, and some of them, Deutsche Bank, and they've named names, which is why you have such a long list, has admitted to it. Right? So it's not very hard to do. In addition, we have the largest commercial short position. In other words, a short position is when you sell something that you do not have, figuring that the price will go down and then you'll buy it when it's cheaper and you make your money that way. So you have the largest short position ever. And of course, we've seen the ones that get whacked when they whack the spot market. So let's see, this one happened on 12/15 of 2016, and it cost a total of $605 to manipulate the equivalent in dollar terms. Let's see, that's hundreds, thousands, millions. $605 to manipulate $313 million worth of gold. What a deal. And this is from the Office of the Comptroller of the Currency of the derivatives against gold. Let's see, this is all gold, right? Okay, this is in billions. So you're close to 30 billion notional, which means nobody knows the true value at risk, in gold contracts that do not nor ever will exist. And of course, I showed you this chart before. This is why you can have a rising demand and declining Wall Street spot market. But with all of that manipulation and everything that's going on, this, can you see that well, Bill? This is a relative performance chart on the fiat markets. So dollars, which is on the very bottom, bonds, stocks, gold, spot gold, and spot silver. Can you see that? So, and this is once this final trend began, which was back in 2000, 2002, which is when I first came here. So, can you see how even with all of these manipulations, which is cheap and easy to do, and lots of layers of entities and bankers doing that, can you see that even with all of that, spot gold, spot silver has outperformed stocks, bonds, and the dollar? And if I put the rest of the currencies in there, it would look pretty darn similar. So if you want any of the links to any of these charts, if you want the charts, whatever you want, just give us a call at 888-696-4653. We're all here to be of service. Have a very wonderful Friday, and I'll talk to you soon. And like us on Facebook, right? Let's see. Like us on Facebook. You got to help me out, Bill. It's Friday and I'm tired.
Subscribe to our YouTube channel.
Thank you. Subscribe to our YouTube channel and give us a call. 888-696-4653. And keep those questions coming. The more that I know what you guys are wanting to understand and you want me to translate, that the easier it is for me to choose my next topic. So we will be talking more about manipulation since that's a question that's come up next week. But in the meantime, be safe and have a great weekend. Bye-bye.